Holy smokes, eh? Am I finally in? Oh, what a morning. Oh my God, what a morning. So let me remind you that trading's risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. But cheer up! And stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Ni hao ma, Jumbo. My name is Wayne McDonald. I am a currency trader, and I've had the most frustrating morning. I apologize for being late. It's not my fault. It's Microsoft's fault this time. Holy smokes, what a cluster F that was this morning. Amazing, huh? So I go to log into my laptop, and it says, hey man, you need to change your password. Why? Why the hell do you have to tell me when to change my password? Anyways, it's like, you need to start changing your password. So I typed in a password. It's like, that's an old password. So I typed in a different new password, and they're like, that's also an old password. I'm like, well, F you. And then in the top right-hand corner of the window, there's a little X, just close the box. You know, I'm like, you know what? If it'll let me skip this, I'll just skip it. So I went to skip. Takes me back to the login screen. Passwords don't work. None of them. And then you go through a little process to bring up I forgot my password thing. You click it. It doesn't do anything. Hey, Microsoft. It says, hey, click this. I forgot my, right? So then you go to open up your cell phone. You're like, okay, what do you do in this situation? It says, you just click that little button that says I forgot my password, and you follow the steps. Except I click it, nothing happens. Click, 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 nothing happens. Son of a... So now I can't get in my laptop. So luckily I'm like, hey, what about my other laptop? I use biometrics to get in. So I get in through biometrics, then I go into Windows, then I go into my settings, then I go into change password, then I got to verify it via email, and then I have to verify it again by cell phone, and then it won't let me change because it says those are old passwords. So finally I created a password, and here I am. Only 45 minutes. Holy smokes. But I love currency trading, and that's why I'm here. I'm here to help. So please ask questions, get involved. You know, I've always said Forex is easy, life is complicated. Thank you, Microsoft, for making my life complicated. Barry, I did get your email about there was a video that one of the course lectures points to the wrong video. But I can't do anything this week. I'm in finals week. This is it. I've submitted my last homework for Harvard. The only thing I have left is 2 final exams. Right on, Barry. So I got that, yeah. So anyways, please ask questions, get involved. What we're trying to do here is develop strong, independent currency traders. I want you to be independent thinkers. I'm not asking you to be perfect. I'm not suggesting I'm perfect, but you can control your behavior in this market. You might not be able to control the market, but you can control your behavior. And if you do it in ways that are favorable to market conditions, you're much more likely to make money than lose money. If you behave the wrong way for market conditions, you're not likely to make money. So the idea is get really good at recognizing market conditions and trading properly. It's not that complicated, but it's never easy. Thank you to Traders Way for being our sponsor of our community of now 15,000 foreign exchange traders around the world. We get together every single day to align our satellites at this time, or approximately this time. And Traders Way really helps. So, hey, they're a foreign exchange broker. You're a foreign exchange trader, and they're trying to earn your loyalty and respect. Isn't that nice? That's it. They're asking for the opportunity to earn your loyalty and respect. So I hope you give them that opportunity. You do so by visiting tradersway.com, fill out the form for a demo account. That's that. And then you say, oh, and they want to serve you. That's it. Give them an opportunity, huh? When you can, in your back office, you can download MT4, you can play some demo trades, you can find out how fast the execution speed is, how narrow the swaps. Last night I was looking at Euro Yen in Asia, and I think it was like 1.2 pips spread. I'm like, holy crap, that's good. So, awesome stuff there. When they pull the trigger, they execute your trades. That's exactly what you want. Tradersway.com. Thank you, Tradersway.com. Remember, these videos every day, they don't cost you money, but they do come with a cost. They come with the obligation of visiting Tradersway.com and opening up a demo account. Cool. So after almost an hour of wasted time and frustration, I'm glad to be here. Hope you had a wonderful weekend. I hope you did your job of the weekend. On Friday, I had quite a long meeting with Ryan, and the interesting thing is, while that's happening, I got knocked out of my last trade from last week. There was a pound yen. I got knocked out for 300 pips. So, COVID. Okay. That's right, your customer. Do the videos. Or join FX Bootcamp, and then you have the option. All right. So here we are. You know, it's a new month, clean slate. One of the reasons, let me bring up pound yen. One of the reasons I got out on Friday instead of holding over the weekend. Where is this? Let me show you what the major technical reason. Okay. Okay. To do that, I have to change this to monthly, pivot points monthly. And you will see Friday, we were here. Okay. And this M3 is the best pivot a bear could hope for selling. See what I mean? That's why I got up. Not that, I mean, other than that, I think there was some R3 action on the weeklies going and stuff like that. But that's really all I could hope for, is get it up there, and then you get to the monthly entry for selling. And I'm like, you know what? Good enough for the girls I go with. Gone. Out. Thank you, Barry. Barry says shorted at 1892. Good. Cool. We'll check that out. Okay. So, if this isn't the best bearish entry a bear could hope for, I think that's a pretty good exit that a bull could hope for. So anyway, so there you go, out. So now what? Yeah, well, that's the whole thing. Now what, right? We'll see how far this goes. As long as we're below these two lines, I think the bears are going to try to get bearish. Try to get bear. Try to get low. Okay. Trying to get low. What else is going on in here? There's something there. And then you got to back out a little further. And I don't know if it matters at that point, even further out. Okay. No, I got you. I wasn't thinking, oh man, Barry, 1892. And he's all bragging and stuff. I got you. Alejandro Garcia says, been using Trader's Way for about 7 months. Happy with their tight spreads. Yeah. Now, when you're trading when the markets are liquid, the spreads are going to be wider, but that has nothing to do with Trader's Way. That has to do with market conditions. That's the interbanking system. But I remember, what was it, a year ago, some guy's like, oh man, their spreads are super wide. I'm trading in the middle of the night when no one else is trading. And then blah, 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 and the spreads are high. I'm like, yeah, that's because only people like you are trading right now. I mean, look, you have to have a liquid market for tight spreads. So that's not the brokers doing. Anyways. On bought the courses yesterday. Congratulations. Awesome. 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 Get through the courses, guys. Study hard. Take the courses. And then there's something going to be awesome on Monday that I'm going to tell FX Spook Campers. So if you want to be in the Cool Kids Club, get on with it. So anyway, so that's why I got out of Pig. It's not that this has to come down. Are you studying Forex, Barry? That's cool. My back is destroyed. I'm having actual trouble getting around the house and stuff because I've been sitting at my desk so much. I'm shot. I'm totally it. But I am done all my homework now. It's really weird, guys. It's really weird. It's really weird. I am done. I have no more papers to write. I have no more homework to submit. I have no group projects to do. I'm just down to two-hour well, one's a 3-hour exam. So I'm down to 5 hours of exams, and then I'm done. I have one on Wednesday. I have one on Thursday. And then, of course, I get to wake up early and do non-farm payrolls on Friday. And then I guess it's going to be champagne and rice. I don't know. Throwing rice around like it's a wedding. So anyways, yeah, so I know how that feels if you haven't slept in a while. Cool. Thank you. Well, I'm getting there. Well, binge watching, Barry, I don't think is the right way to do it, but it's a good place to start and then keep going, right? Okay. XRP, we could look at it. So anyways, at FX Bootcamp on Monday, I'm going to, since I'm wrapping up my 5-year plan, I've been working at Harvard now for 5 years. There was pre-cohort work or pre-program work, and then I got into my program. And so I've been working for 5 years, and I'm going to share my new 5-year plan for the next 5 year. Okay, we can go to cryptos. I don't think I have a crypto thing here, but we can throw down something. Guess we'll do it here. So there was a flash crash. I don't know anything about XRP, but did anyone get hit by the flash crash on Bitcoin? I don't see it here, but I read about it this morning, so I don't see it here. But apparently there was like a 10% drop in Bitcoin in like a couple of minutes. Felipe is, of course, dude. Yeah, yeah, Bobby. Felipe is awesome at night, stuff like that. But yeah, have I been to Felipe's? Oh my god, have I been to Felipe's? Oh, I think I've spilled blood in Felipe's. No BTC flash crash. I read something about something. But so anyways, yeah, I don't see anything here, but maybe it's in a different type of market. But I heard Bitcoin drop 10% in like 3 minutes or something. Bobby's like, amazing, right? Amazing. I wouldn't say amazing, but I love it. I mean, the burritos are cheap. They're awesome. I like hanging out on the rooftop deck at night, in the summer. Other than that, I mean, yeah, it's great. How about great? I wouldn't say amazing. I mean, it's great. I mean, you couldn't ask for anything else. But I've been in Felipe's on a Saturday morning. They haven't even opened the restaurant yet. It's just workers prepping. And they let us inside. We sat down at the lower bar, and the bartender was just like pulling booze out of the cupboards and stuff. And we're like, set them up. So, yeah, I've been to Felipe's. Anyways. So, Bitcoin, you can see what we were talking about. Was this a live trading group or Forex.Today? I'm not sure. Sometimes they blend. So currently we have a very, 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 very clear uptrend for Bitcoin. And the question that this analysis is trying to answer is if it stopped going up, where would you anticipate it might? Not that it will. This doesn't say this is going down. It's more like, where should a bull be cautious and where should a bear be hopeful? John said it did flash crash, right? Yeah, it went from 12,000 to 10,000 in 10 minutes. Yeah. That's what I thought. Bobby, so Bobby, are you in the area? So here, if this is what a bear would look for to get permission, okay? So if we hit sort of this 14, what is this? This is 14,000, but it doesn't look like 14,000. I don't know what that is. I guess I have to reset it. Let me actually double check. Sometimes these old pivots, you have to kick them. 13, oh, 11,392. Okay, that makes sense. So it says 11,000, let's say 500. If you got a lower low, you would look for a lower high and then start selling if you're a bear. Oh, what school is your sister in? Okay. And then the other one would be here, especially if it's OOP and you hit your targets hot and fast. Those would be the two places. If you were a bull and you were nervous about getting out, you'd look for price action here, or you'd look for price action here. Okay, you see? So it's not saying it will fall. That's right. That's where. Oh, she's in Cabot House? I love Cabot House. So it's a hell of a walk, though. Oh, my God. Let me tell you, it's a hell of a walk. You got to hoof it. It's got to be a solid 1.25 miles to campus, and then back. And then if you have 2 classes in a day, you got to walk to campus, and then you're like, well, I need to eat lunch. So then you got to walk back, and then you eat lunch, and then you got to walk back to campus. And then you're like, I got to eat dinner. So then you got to walk back. Holy smokes. But cool. Yeah. Cool. Yeah. So at Cabot House, I talked to the what do they call the guy? The dean, the dean, whatever he's called, the guy that runs the whole building, the silver-haired man. I walked up and I'm like, hey, I know there's no alcohol, no smoking, but I'd like to smoke a cigar and drink whiskey. And he's like, didn't you just hear the speech? I'm like, yeah, I totally get that, but look at me. I'm used to a certain lifestyle. So he and I got to an agreement, and he set up the Adirondack chairs in an area and set up a smoking area for the international students. And so we had Adirondack chairs, and he's like, as long as people can't obviously see that you're drinking whiskey, like if you're holding a whiskey bottle, I can't have that. But if it's in your cup, great. And you can smoke next to that thing. We'll put it way over there. So I had this, the house dean, thank you. So at Cabot House in the quad, I had my own like cigar and whiskey corner. It's just fantastic. What a great time, man. So next time you're at Cabot House visiting your sister, you could look for, I probably got stains out there somewhere. I've been there. I have ghosts in Cabot House. For sure. All right. And by the way, Japanese whiskey. Yeah. So if you're a bull, you need to ride this 21, but these are the lines in the sand that you got to be careful about, okay? So if you see it wimping, maybe you pull your stop or bag your profits. Yes, a flash crash is really, it's a market error, if you want to think about it that way. So I don't know how Bitcoin works per se, but it can be set by stops being hit, and it creates an avalanche. Okay? So imagine this market's going up. La-di-da-di-da-di-da-di-da. Okay? And people are moving their stops. And all of a sudden you get like this area here where everyone's got their stop, right? And something happens in the market, and all the stops, like the first stop is triggered, which drops, which hits the second stop, which hits the third stop, which hits a fourth, and all of a sudden it's like a snowball. So an avalanche starts with, one snowflake landing at the top of the mountain, and then boom, massive destruction at the bottom. Okay? Beep. It's usually like, it happened a couple of times in the 2000, I'm guessing 2007, 2008. There was a couple of flash crashes where one was triggered by a fat finger, where someone accidentally sold $1 billion worth of a stock or something. Another one had to do with the servers and high-frequency traders triggering each other, which triggered more high-frequency traders, which triggered more, because the algos are sitting around and they look for certain situations. So, for example, you might have a quant that says, on days where every single stock on the S&P 500 is red by more than 0.25%, there's a 92% chance it'll remain short the rest of the day. Okay? And so what happens is, what if a bunch of people have that same algo, and on that day where we're having a tough day, there was some bad earnings or something, and everything is down, when all of a sudden, machines around the world are all dumping the stock market at the same time to catch the same alpha. And weird anyways, right? So that can create a flash crash. The Euro peg, I wouldn't call it a flash crash. That was a market crash. It's kind of different. I mean, it looks similar, but it is different. That was manufactured by the Swiss National Bank. It wasn't like a glitch in the matrix. Okay. Barry says, that guy David is so funny on price action course. David's many things. I don't think of him as funny, though. Yeah. Anyways, good talk, guys. Good talk. Let's keep going. Okay. La-di-da-di. We likes to party. We don't cause trouble, and we don't bother nobody. So remember how I kept saying, oh, look. Right? Key moments in market history. Okay? When you're at your charts matters. One thing you will find as you get better and better and better and better and better at trading, you'll realize your clock is one of the most important technical indicators that you have. There's a lot of traders that are pretty good at technical analysis but get mediocre results. And many of the times I've seen those situations, they're simply trading at the wrong time. So what I end up doing, so I'll ask somebody, I'm like, okay, I know what you're thinking, but why are you doing it at this time? And they'll say, well, I have a day job and I got kids and I only have like an hour and a half a day that I can trade. And what they do is in that hour and a half window, they force some trades. But that's not planning. That's reacting. I mean, they think they're planning, but it's not quite right. And so what I do is I take them off sort of intraday type trading and put them on day trading or swing trading, which is different because you're planning your trades not when you're at your charts, but at the right time for your charts. There's a difference. Okay? And I take them out of that window they're forcing their trades, and instead I say, okay, well, like last week we were talking about the Asian fade and stuff. So okay, plan your trades around the Asian trade, and if you're not going to be able to be there at that time because you're sleeping or kids or work, then what you'll do is you'll use limit orders and stop losses, and you'll have to, obviously bet on the trend and rely on the math working out, meaning if it's trending in a direction, it's more likely to move in that direction because that's what a trend is. So that's in your favor. And second of all, you're buying dips. So you're buying a discount to yesterday's trading, right? So right? And if you bought a dip, and the only way you would lose is if it dipped even further discount to like a 786 or 100% retracel, which is, by definition, a reversal, so you want to be knocked out. But if the trend does continue, it will continue in your favor, and therefore, when you're trend trading, right? You getting all this? Your winners, by definition, has to be bigger than your losers. Your losers knock you out on reversals, which is a good loss. Those losses are small. But because you're a trend trader and you got your winners have to be bigger than your losers. And if it is a trend, you probably have more winners than losers. Or you can squeeze a couple of trades in the 90 minutes you happen to be at your charts, whether the markets are good or not. Which, of course, doesn't get you the right price, and you don't get the right math, and it all falls apart. Okay? Cool. My oh my WTI. This is a nice up. So this is something we talked about. Again, I don't know. I think this actually was the live trading group on Thursday, because I think one of the trends we were looking for is CAD strength. And we were looking all the way out to this Friday. Of course, this is last Thursday. I think it's this Friday is Canadian jobs report, right? And so we were like planning 8 or 9 or 10 days in advance. And part of that was that event-driven strategy. But on top of that, okay, you have crude triple bottoming on the most important pivot for bulls. The trick is we're still below here. So for this to work, we basically have to treat it like a range, which it's kind of already in, and then look for the break to confirm. Okay, now if this happens, of course we were talking about it here, guys, not Friday, Thursday. If that happens, then we're long off the monthly M3, and oil goes up, and CAD goes up, and USD CAD goes down, okay? Blah, 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 blah. Alejandro says, hey, if it breaks 40, does it go to 50? No. No, don't think that way. Wet dog look. Huh? Do I look like a wet dog? I don't see it. I've been called worse, though. Yeah, I've been told I smell like a wet dog, and I'm like, really? I smell like a wet dog? Why is that? And he's like, all white people smell like wet dogs. I'm like, okay. Okay now, oh for sure, eh? I'm like, I didn't know. I'm so sorry. I'm like, are you sure? If I said it did, I meant it. Yeah. Yeah. Thank you, last. All right. So anyways, if you are a bear, let's look at it that way, because I suggested the bullishness and how that would affect USD CAD. Bears on oil, however, have their eyes on the prize here, and you have what we call a roll reversal. Okay, this support, if you're a bear, you would suggest this will be resistance. Okay, so this is old support. This would become resistance, and you're one standard deviation from the mean. And up here at the M3, which is the greatest of all selling pivots, you are two standard deviations from the mean, which means you've covered 95% of the expected ground in this currently, on this time frame, 1 hour WTI downtrend. No. That's what I was told. I'm telling you, it wasn't me. It's a true story. I don't know. All right. All right. All right. I bought this somewhere around here. I bought it right around there. Lost 33 pips. No, stop it. Okay. Meta, I didn't say it. And you know what? Even though it had to do with color, I don't see it as racist. I use different hair product than he does or something, right? Like, I don't know. I can see it. And then, of course, like food and stuff, when you meet people from different cultures and they use different spices and stuff, you inevitably or inherently smell different. But I don't think it's a racist thing. But anyways, I wasn't insulted. I certainly didn't share the story to insult anybody. That's what someone said. Someone said in the room I look like a wet dog. I'm like, huh, no one's told me that before, but I've been told I smell like a wet dog. So, like, there you go. Yeah, but okay. We'll kill it there. We'll no more. All right. Okay. So that was sort of the plan. See, the problem is this one had more. Like, I had to choose. All right, here's what I had to do. And you can see, like, it had to do with the timing issue, too. I had to choose, have a 33 pip stop or have, like, a 99 pip stop. And last night, I just didn't feel like the 99. Yeah, why not buy again? Yeah, for sure. Yeah. Yeah, Maida, I know what you're saying, but, you know, I didn't see, like, hurtfulness in the eyes of the person talking to me. So it, you know, I think, yeah, so I don't know. I know yeah. Anyways, I know it's sensitive, but in that context, it was fine. Yeah. But I know it could have been hurtful, but it wasn't. It wasn't. Okay. So anyways, yeah, should I get back in? Yeah, I don't have to get back in just because it's an M2. I kind of gave it a shot, you know, yeah, it just, you know, yeah. Yeah, I'm not there yet. I could, you know, I'll take a break. I mean, I did fine. It's been July was a great month. It hit my targets. Everything's fine. Right now, I guess, like, why am I not rushing back in? The fact that some of the yen pairs were at monthly M2, or sorry, monthly M3, and we're August. I typically don't trade aggressively in the beginning of August for sure. So yeah, I guess that's it. I'm just right. Yeah, Maida, you're super nice. So it's not too soon. No, no, it's me. It's not you. It's me. It's like this is 100,000% valid if you're a bull. But I don't like the top, and the top was obvious. And because of the distance here to here, it kind of sets this up as much as it sets this up. And I kind of like, I gave a half-assed entry, right? Like it had a chance to go up, and I would have felt so much better if it had gone up. And I'd say, see, look, roll reversal. And it didn't, and this is still valid. But again, because of seasonality issues, I see this is also very much in play. And I had to choose like buy it here or buy it here. And both are kind of the same thing. And then I looked at it, and the distance from where my entry is and down here, I'm like, it's 100 pips. And I'm like, because, like, think about it. Like, why did I get out of the pound yen trade? Well, the pound yen was at August monthly M3, and that's where bears are going to sell if they're going to sell. And if they're going to sell, I'm going to leave 150 pips on the table because I wasn't strong enough to just get out with my 300 pips. So I got out at 300 pips. I don't see it as a weakness. I see it as a strength. But now that sets up because it did come down. Then I look at it and say, there are bears present. Now I translate all of that into this. And I'm like, you know what? There's a risk. There's risk off players here. We haven't determined who's got the advantage right now. So I did a shot, right? From a distance. My number one goal wasn't to get hurt, but I had to take the opportunity because it was given to me. And it kind of failed down into here. And then I just kind of like, I'm going to hide for a while. Because I think there's very much this potential here. As much as there's the potential doing this. And then, of course, there's the potential of doing both. And I think that's even worse because then you find yourself in the middle of nomad's land and you get shot by in the front and the back, right? You get shot by friendly fire as well, enemy fire, right? And just like, so look, this is a valid trade in a market that I don't feel comfortable in the moment. So I took the shot. It didn't go in the net. So I'm like, I'm gonna fake a cramp and fall on the ground and scream, and they'll carry me off, put me on the sidelines. So, anyways, there. I tried to like that. That's how it felt. Okay, that's how it felt to me. So maybe that makes sense. Okay, daily we're still riding a 5. Okay. That's that. Now, let's talk about pivots. Let's talk about pivots, baby. Let's talk about, right? Anyways, this doesn't say down. I want to make sure you understand how pivot points work. You don't look at that and say sell. Okay, you'd have to look at all of this and say sell. And if that doesn't say sell to you, then you don't sell. Okay? Right? Pivots don't tell you to sell. You tell yourself to sell. How? You did fundamental analysis and long-term technical analysis. So, you know what would say sell? You look at all of this and you say gold is overbought. I'm not saying that, but you could. And you can tell me, oh, all-time high, blah, 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 blah. It doesn't matter. Whatever, it doesn't matter. Okay? You're not right, you're not wrong, you just is. Cool. Now, so you set yourself as a bear and you look at this. This is M3. This is a great selling pivot. Do you sell there because it's an M3? No. No. No one's ever told you that. Okay? So, if you were a bear and you saw a double top and a lower low, right? Lower high, would you sell here if you're already a bear? Oh, faux show. I guess I have to do, oh, that show. Oh, for show. Okay. See, if you see this as resistance and fundamentally overbought, and then you see a reversal pattern at resistance, then you have choices. You can trade the double top, you can trade the 1, 2, 3, and so on and so forth. And typically, I'll tell you, a market like this needs a double top of the double top. So I can't go right any further. I just can't get that far to the right. But let me show you kind of, I'll draw it a little tighter. Double top, lower low, and then what? Okay, come on, mouse. Okay, so what I mean is you get a double top here, and that shows you there are bears. But then the bulls are going to buy the 21, and it comes up to here, and then the bears sell again, and then we breach the 21 and go to the 55, which then creates a lower high, lower low off this number. And so truly, before you get all giddy about being a bear, keeping it below $2,000 an ounce, you need a lot to happen. And this is where you kind of are like short-term short and then long-term short. Okay? You change your expectations. This, you expect not to be down more than a week or so, because you're only going down to the daily 21. And then this one, you're going to be down for a month or 2 or 3 or 4 or 5. That's how you tiptoe into a position. Okay? But meanwhile, even if you're a bear, this is not bearish. That's my new license plate. Huh? I'm going to get a yellow Lamborghini, and it's going to say, oh, faux show. Makes sense, huh? That's the 3. Yeah, it is, huh? Oh, faux show. Okay? So, what if you're a bull? Buying here is too high. It's pricey, too expensive. Now, you could, of course, you can do whatever you want. Okay, you can drop into a smaller time frame and say, well, Wayne, this says up. Okay, yeah, it's still overpriced, but that's your call. Maybe I can change this. So let's say you're a bull. Let's change the environment completely here. Let's do it this way. Okay? I think you should be buying this a little closer to 1950. We're at 1970. But it was down a little lower earlier. So, I mean, you have to make a judgment call. That might be close enough. but then you need to be able to afford a stop that is $40 away. Okay, so this might be good. Let's take a look down here. Okay, now you can take this further and say, well, what if you waited for a higher high, higher low on the hourly? Right now we have this going on. Okay. So if you're using price action, that's valid. If you're using market action, this was sort of the entry. Okay. And then of course this is down in here. So you have to put your tiptoes here. This is valid, but a little bit pricey. But you might say, well, Wayne, that's like buying a beachfront property versus a property that's 3 blocks from the beach. Why is the one on the beach double the cost? Because it's 10 times better. Greece. Very nice. Greece. Yeah, we got to hold our next Forex conference in Greece, huh? Greek. And then we'll get a boat and we'll just sail around. We'll go over to Turkey and then sail back to Greece. And then we'll go to Sardinia and then back to Greece. I even heard maybe sailing over to Croatia. Anyways. Aussie dollar? Sure. Let's talk about pips, baby. Let's talk about you and me. Sounds like a great idea. Of course it's a great idea. Of course it's a great idea. It's fabulous. But we can't travel, which sucks. So one of my Harvard friends just got hired as the vice president of cybersecurity for a major bank. And I said, man, I'd buy you a bourbon and a cigar if I could. And he's like, yep, as soon as we can travel, man, game on. I'm like, you bet. Mykonos. What a historic place, huh? Of course, every place in Greece is historic. Mykonos. Yeah. Amazing. Cool. Dollar strength here. Yeah. So which one did you ask about? Aussie? And funny, I don't even have it here. All right, so let's add Aussie. Let's talk about Aussie dollar. Aussie dollar. There we go. Get rid of the Swissy. I don't even trade that. Okay. Now, based on my long-term fundamentals, I want to be long. Long and strong. Okay. So, therefore, I'm going to look at it from, well, first of all, let's look at it this way. Okay? If I buy it here, I'm going to be long for 4 weeks. FT9, maybe your server time is different than mine. So if you're with a different broker, that might be it. Okay. Blue Boy says, Wayne, with school being done, well, I got to get through this week. What's the next big hill for me to climb? I'm announcing that to FX boot campers on Monday. It's huge. My new 5-year plan. It's huge. Okay? And yes, I'm bringing some of you with me on that journey. Okay? Okay, so if you want to be a bull, your first opportunity has been presented to you. Okay? And you can see what's going on here. So you got a roll reversal, you got a 4-hour 21, and you have a monthly central pivot. These are monthlies. So whether you get it here or a little lower or you have to wait till September, I don't know. Okay? But you have to look at this strategically first. So you have a minimum of 400 pips that you would make on this trade if you're right. If you're wrong, how much would you like to lose? How much are you willing to lose to make 433 pips? Is it 400? We'll call it 71 to 70. Let's call it 333 pips. How much are you willing to risk 330, right, for 333 pips? $111? Am I an FX boot camper? If you've taken the video training courses and joined what we currently call the swing trading group, or if you're in performance coaching, then yes. If you're in my live group on Thursdays, the answer is yes. Okay, so you guys are giving out different numbers. So here's what you do. You put that in your analysis. Now you drop down in a smaller time frame, and now you're asking yourself one question. At what point do you buy? Now, the longer you take, the more pips you need to risk, because if you wait 50 pips for the confirmation, you have to add 50 pips to where you could have just bought it down here. You could have just bought it there because it's the monthly central, of course. But if you're like, well, that's too aggressive, great. Your conservativeness will cost you more pips, however. So now the consequence of that is you should lower your lot size. So now if it was 80 and now you got to add 50 to your 80, and to afford that you need to cut your lot size, which reduces your risk but also reduces your reward. Okay? So now this is your alpha. We could all trade this at exactly the same logic, but at significantly different prices. Some people might have just bought it purely because of this. Someone might have bought it closer to 70, right? So we could be 50 to 75 pips apart on a 333 pip trade. Doesn't matter, it's the same logic. Okay. Now you could also, on this scenario, look for an up, a down, an up, and a down, and buy it here at 71. Okay. So now you'd be long at 71, going for 70. What was it? 74.33. Okay. Well, still going through the courses is fine, HK, but you'll have to be in the live trading group. And if you're not ready, don't worry about it. Don't sweat it. Last Samurai says 600 pips. Okay. So that, I said that's the minimum one. So let's pull this back. I guess I have to go all the way to the 4 hour. So the conservative target is 74.33. The aggressive target is, wait, I thought, oh, you know what? Sorry, that is the aggressive one. Sorry, my bad. This template doesn't have it set up the same as the other templates. This is supposed to be true. So this is monthly bullish, right? Okay, so let's do it this way. Template, save template. Monthly swing bullish bias. Monthly swing bullish bias. Update it? Yes. Now let me quickly fix the bearish version. Okay. Template, save template. Monthly swing bearish, monthly swing bearish. Overwrite, yes, done. Cool, so let's go back to bullish. Template, monthly swing bullish. Okay, all right, let's do this again. So the two targets, the conservative and the aggressive target for the month, $73.60, and the other one is $74.33. So 73.5 to 74.5. I mean, okay. So there you go. So you would adjust that way. Okay. So that's monthly. So you could set all that up. Okay. So here's another way you can do this. I don't know if this is helpful. Let's try it. I like showing different ways of doing the analysis. I can squeeze this in here. Come on. Well, I got to go all the way back to 4 hour. All right. And I still can't get it. What I want to do is get rid of that. Okay, that makes sense. Okay. Let's, you know what? I'll leave it like that. I like it this way. Okay. We're going to leave it this way. And now let's change the setting here. Indicator, bias pivots. Instead of changing the template, I want to leave this. And let's do weekly. And it should be approximately the same. Actually, we've already busted through the weekly. So I'm going to mark it, however. And then let's adjust one more time and go daily. And close it and then mark that. So this is tomorrow's buy zone. Okay. Now, one reason it came down for bears, of course, we hit profit targets for last month. We hit a lot of R3s and stuff. Notice that if this is the weekly buy zone, then the weekly sell zone was here. So we had this drop into the sell zone kind of thing. So if you wanted to be a bear, you certainly could have been a bear. I'm still hoping to be a bull. So I'm trying to line up places in our recent or current, let's say current history, where we could be bulls. Okay, I'm still looking at it from a bullish point of view. I'm just going to get rid of this completely now and throw this logic out. Let me now not do it this way. Let me do it this way. The white zones I'm about to draw are potential buy zones over a longer period of time. So you could almost count this, right, as a whole area now. Okay. So you could say, as a bull, as long as you're above 70, you're looking to buy. Okay? Now, you have to buy on smaller time frames when technical analysis confirms your bias. Okay? So right now we're making, on smaller time frames like a 15-minute chart, we're making lower lows and lower highs. Is that the type of market you buy? No. So now you wait, and my mouse is not working very well. So now you wait until on the smaller time frames you get different price action. And when you get that, you say, well, that's what I've been looking for. So if it comes down to here and kicks off this number and you get this, that's when you start buying back into the uptrend, because even though it's been down for a day or even a week or even 10 days, on the long run, it hasn't changed anything. And that's what you're waiting for. You can say, well, fundamentally, nothing's changed. This is profit taking because last month was so ridiculously bullish. The bulls have to take profit, especially due to seasonality. So they take a break. They book some profit. They put some money in their pockets, and then what? They'll do it again. Right? All right. Could be waiting for RBA and stuff. Yeah, but we already know what all that is. So not really. Okay, so let's do this. Let's go through. Let me take requests. Let's do a couple more requests, and then we'll call it a day. Right? What do you want me to cover? Please let me know here in the chat, and I'm happy to do that for you. Let's go. Now, Men in Action says, so will pound yen be bullish again? Well, that we don't know. The question is, will you be bullish again on pound yen? That's the question. I don't know the future. Okay, so now if you're still a bull on pound yen, you have to identify support, and then you have to identify trend, and you have to identify price action, and then if they all line up beautifully, you pull the trigger. If you can only see my wife, then you would understand. All right. I need more ghee. All right. Okay, cool. That's how you do it, guys. You don't know the future, but you know your future actions. You don't know the future for the market, but you know your future actions. Okay? So if you were a pig, right? Great British pig, great big pig, this would be of interest to you on this time frame and on this setup. Now, on this time frame, what it's suggesting is this. Okay? So, if you're a bull, you know you're on something that is going to be interesting for bulls. So now you need something to confirm that other bulls besides yourself are going to buy this. Because you can see the vulnerability here. Okay? That was supposed to be blue. Come on, my mouse is not working well today. Okay? There's your major risk. Okay? So you can see immediately, as soon as I open the chart, you probably notice, boom, selling at 131 as a bear, obvious. Okay? It's like a slap in the face. Booyah! If you're a bear. So we know there are bears here. That's it. So you have to either battle them now, and I want to see other traders, other bulls buying at exactly the price I want, 130. And if they don't, I take a walk because I'm not big enough to move this market. Okay? And if bulls don't buy it at 130, bears are taking this down to 128, or certainly 129 and a half, but probably a lot farther. Okay? When to carry trade? Anytime you're earning a positive yield differential. Okay? As I've said all year, carry trading will not be the strategy for 2020. It probably will be for 2021. Okay? So, I mean, we could look at exotics. Thank you, Mo. I count that as a true compliment. I'm happy to be unique. Okay, so anyways, Euro ZAR, South African Rand is getting destroyed. Destroyed. It's above 95%. I mean, it's like 99%. That's got to be 3 standard deviations. I don't think we can do it for this time period, but just for fun, insert indicators. I don't even know where this would be. Where do they have it? I know it's somewhere stupid. Yeah, Bollinger Bands trend. Let's do 3 standard deviations from the mean and see what comes up. I will make a giant, obvious, bright color. Oh, 3 standard deviations from the mean, eh? Oy vey. It's South Africa's currency is being destroyed. Okay. Dr. Mahmood says, hey, can you explain the different memberships of your group? Yes. You can take video courses. And if you also want live, you can upgrade your account to have live. That's it. Now, we got some more interesting things coming around the corner, but not for people that haven't done those things yet. If you haven't done those things yet, then you're still in, learning mode. But it's not complicated. Okay. Crazy South African Rand. I'm sorry, guys. Now, if we flip over, because I knew based on Euro that the Euro ZAR was going to go up. I wasn't sure about the dollar, but you can see the dollar is much more recent. And someone in the live trading group, I think like 2 weeks ago, wanted euro rand to fall. They wanted this to fall in this period because it was trending at that time. And I'm like, wait. I said, wait. If we get positive global macroeconomics, which would favor the South African rand, it will also favor the euro, but euro is 40% of all Forex, and percentage-wise, South African rand is like 0. So you might be on the right trade, but on the wrong currency pair, and your euro is going to destroy your rand, even if you're right on the rand. So I said, if you want rand to go up because of positive global macroeconomics, the net effect of that for dollar would be dollar weakness. So if you're right on the rand getting strong, you're on the wrong currency. And therefore, you should follow this. And of course, in the last few days, there's been profit taking, which then strengthens the US dollar and now has affected this, but not nearly as bad as that. Okay? And that has to do with the global flow of money. Once you understand global money flow, you'll understand which one to take and which one, right? No, that's FX Bootcamp Live. That's different. You can't join that until you've done the other things. That's live performance coaching. But if you don't know how to trade, that's the wrong place for you to be. If you need to learn how to trade properly, you need to start with all the hours and 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 hours of video training so you can get educated. And then the live trading group that I do every Thursdays, you can come together. We could put theory and practice together so that you're actually gaining experience. And you can talk things out with your fellow friends, because we do a lot of group work in my sessions. So it's not just me preaching. You'll actually work with 6 or 7 other people that feel the same about, let's say, the yen's getting strong or the yen's getting weak. So let's say you think this is risk on, bullish global macro between now and the end of the year. So I'll put you in a group with people that feel the same about that strategically. But now tactically, you guys have to go through your charts together and explain what you see and actually identify the best opportunity your group, which already agrees on strategy. You want to buy all the yen pairs. Great. But which one is the best and why? So then you got to through and you got to discuss with your group. And then you come back and you present it to me in front of everyone, and then I can ask questions and pull it apart and add to it and polish and that kind of stuff, right? So, boom. But performance coaching is way, way different. And you're not ready until you can go through that other stuff. Gotcha? Oh, yeah, I guess we can do Peso on this. So let's add a Peso. You can only... Maybe you would understand. So we want to be bears on this, or let's say we can only be bears on this. So let's do it this way. Okay, and now let's tile this vertically. Oh, and I had this anyways. All right, well, fine. Okay, fine. All right, so if I were a bear and I were to marry, I would marry a fisherman than any other chappie. All right. Okay, so if I were a bear, I would look to sell this around 2266. 2266. And I would be short for 4 weeks or less. Okay, so notice this doesn't tell you to sell. Okay, it doesn't tell you to be a bear. Nothing on this chart tells you that. You have to master that idea. There are still some people like, they buy at a pivot point because it's a pivot point. I'm like, well, why are you a buyer here? I don't know. It's just, you told me to buy at M2. No, I didn't. Told you if you were a bull, you should buy at M2. But this isn't even a bullish market. What the hell are you doing buying it at M2 in a bearish market? I don't know what I'm doing. There you go. Thank you for pinpointing it. Okay? So, if you know you want to be a bear, and I can give you 10 reasons why, it doesn't matter. But I could say, I know I'm a bear. So my question now is, when are the market conditions favorable for me to sell? And when do I walk away completely from the opportunity? Okay? Got it? So, I know I want to be a bear here. I just don't know if I'll get an opportunity. I'd like to sell it around 2266, but I won't sell it at 2226, but I'd like to. Okay, so now I need some sort of confirmation, let's say. Okay. So now I wait. That's that. Why do I want to sell this? Can you guys give me some reasons? Huh? Give me some reasons. Why would I want to sell this? I'll let you answer, and then I'll answer. Okay? So this is why, here's a few reasons why I would only sell USD Mexican peso, and around this time of the month and no other time ever. Do-do. Ba-ba-ba-da-ba-da-ba. Ba-da-ba-da-ba-boo. Boo-boo. Boo-doo-doo-doo-doo. All right. Reason number one. If I am long, I lose. I'm guaranteed to lose a lot of money. So based on interest alone, you have a very large negative internal rate of return, which means per dollar invested, I am going to lose a lot. Okay? Because I'm losing this times my leverage. Okay? So you could think of this as 40 pips a day is one way of looking at it. It's not quite. The math is a little complicated, but just think of it as you lose 40 pips a day. You're like, well, I don't want to lose 40 pips a day. I know, right? Okay, so think of it that way. And the true way of knowing is buy it for one day on a mini lot and see how many pips it cost you. Okay. Now it's pips measured in pesos, so it's not a big deal, but it's a deal. It's a big. See, it's not big money wise, but it's big IRR wise. Okay. So it's a big negative in the IRR, and it adds up, especially over a year. Okay. Now, if I'm short, I gain a positive internal rate of return on interest only, which is a positive dollar-wise. And it's multiplied or enhanced by the level of leverage you have, so it matters. Okay? So I might make, let's say, over the course of a year, in interest only, I might have an internal rate of return of, let's say, 50%. Just collecting interest. Okay? What do you think of that? Okay, so internal rate of return is a percentage, and it's because it's based on the money you've invested. So your account won't be down 50%, but let's say you invested $1,000, which got you a standard lot, right? And at the end of the year, just based on interest, just on the interest you collected, what we call swap, you'd be up, you would have collected $500 in swap. Now, you'll actually, I don't know what the actual number is, so you'll have to figure it out. Hold it short one day. Even if you lose pips, you'll collect the swap. And then see how much you made on one day, right? And then multiply that by 365 days. And you might find, okay, you only make, let's say, $360 per year. Okay, well then you have an internal rate of return of 36%. You're like, oh. Okay, so that's one thing. Now, the timing issue has to do with $2.6 billion. $2.6 billion. Does anyone know the word for this? It's remittance. It's a repatriation, so to speak. Except it's, I think it's the opposite and equal of repatriation. It's people in the United States of Mexican descent sending US dollars home to mom and dad or wife and kids back in old Mexico. Okay? 2.6 billion every month. And guess when it happens? I don't know when it happens, but I bet you it has something to do with a paycheck. So my theory is it happens at the beginning of the month. Okay? You see what I mean? So those are the two things that predominantly focus me on this. I want to, so what if you knew $2.6 billion trade was going to hit the market? Could you front run it? Well, let's take a look at what happened last month. You ready? First day of the month, July 1st. And guess what? The dollar went from from strong to suddenly Mexican peso surged. Surged! But this is a pure foreign exchange trade, right? People in America were converting their dollars to peso, right? Because they sent money home from the United States to Mexico. They sold the US dollar to buy Mexican peso, which forces this pair down. And it started on the exact first day of the month. Oh my God, that's amazing! I know, right? So, we don't know what's going to happen in the future. But if it turned right around here, I'd say, oh, there's my remittance trade. 2.6 billion is leaving the United States today and going back to old Mexico. Okay? Is that worth a thumbs up? Can I get a thumbs up for that for at least? So if you go to youtube.com/FXBootcamp, I believe I have a couple of training videos there, or you can search Google and say, how to trade the Mexican peso and why it works, Wayne McDonald. That'll probably work as well. That'll get you what you need to succeed. And now what? Okay. Who's selling peso? I think that's people buying the dollar. Remember, this is dollar-based profit taking on end of month flows. So the way I look at it, like I cashed out of my pound yen and what was the other one, pound kiwi, and I cashed out of my yen trades on Friday because we hit obvious targets, and you just take profit. So the thing is, no one may actually be buying the dollar peso right now. What is more likely happening is people are taking profit on euro dollar trades, for example. When people take profit on their euro dollar long trades, the brokers have to execute short positions to do the offset of your long position to cancel you out, which is a form of trading which drops the market, which hits a stop, which then gets offset by another short. And the market's falling, but nobody's actually selling. The market's falling because people are getting out of the market. Therefore, euro dollar falls. The consequence of that action is US dollar strength, which then carries over to USD Mexican peso going up, and nobody is actually truly trading it. It's just the change in valuation of each individual currency, which we call relative strength. And it doesn't mean someone is buying this. Now, I've shown using the Commitment of Traders report, I have shown how euro dollar went up for 3 months straight and no one was actually buying it. No one meaning no one significant. Okay? You might have been buying it and picking up 20, 30, 40 pips, but that's not actually what was moving the market. It was people getting out of their dollar long positions, and I proved it, like with facts, evidence. I proved that people were exiting their dollar positions. And again, since euro dollar is 40% of the entire market, people are dumping their dollar positions and buying euro, not really buying euro, converting it back to euro, okay? Because they're exiting the dollar, so it goes back to wherever it was going. And one of the major benefactors of that, if that's what you want to call it, was the euro. Europeans put money into the dollar when the market was crashing. When the market stopped crashing, those traders exited those positions and converted it back to their local currency, which equated to euro strength. But it wasn't like someone said, I love this technical analysis, now I want to buy. Actually, they say, I love this technical analysis, I'm out, give me my money back. And there's a much different psychology between give me my money back, I used to hold euro, I want my euro back, versus, oh my God, I need some euro, give me some euro, right? One is actually getting out of the market and leaving as a participant, and someone else is entering the market, acting as a market participant. And once you understand the difference, you'll understand how the price action is affected by this. So yes, USD Mexican peso is rallying hard for 2 days, and yet no one may actually be truly trading this and making it go up. This upward motion in USD Mexican peso probably has nothing to do with the USD Mexican peso. It has a lot more to do with pound dollar and euro dollar than it does dollar peso. but the relative strength is impacted by that. Oh my God. So, thank you for being part of the 15,000 foreign exchange traders on YouTube, being in this community. Thank you for all you do. Please like, please subscribe, please comment. Links to my training courses, live groups, books, to Trader's Way, to all kinds of amazing, awesome things you've been asking for. Chart templates, they're all in the description below. Click the link. Yeah, you might have to pay $5 or something, but what you need has been invented because people before you have asked for it. Have a wonderful day. See you tomorrow.